Well, hello and welcome to Business Morning. It's a TGIF trade right here in Lagos, Nigeria. I hope the week has been good to your portfolio so far, but if not, you still have next week. We've seen rate cuts coming from the US and maybe an expectation of a rate cut here in Nigeria. So we'll see if you can make profit going forward. But let's get a check on what played out in the market. Yesterday, we see the exchange closed Thursday session in the green, 0.16%, 142,000 for the all-share index, and the equity cap, that's at 90 trillion. Year-to-date gains, that's at 38.22%. So definitely not bad. That's outperforming inflation at about 20.12%. So I guess that's good there for your portfolio. But let's get a check now on some earnings. We see the big banks, they're reporting earnings right now in Nigeria. We have the latest one. United Bank for Africa posted a pre-tax profit, 388.4 billion naira for the first half of 2025, reflecting its ability to sustain strong earnings. The figure represents a slight dip from the 401.5 billion recorded in the same period last year. The Pan-African lenders' top-line growth that was robust, powered by a 32.9% jump in interest income. Then we also see there's some resilience there. The continued, we see they're balancing higher funding costs, tighter regulatory conditions that kind of help them boost their income there. Then let's look at Zenith Bank now. They also unveiled their standout performance for the first half of 2025, recording a pre-tax profit of about 625.63 billion naira, driven by nearly 2.52 trillion in gross earnings, up almost 20% year on year. Key to the growth was a sharp 60% leap in interest income, which now makes up roughly some 3% of the bank's top line, up from 55% in H1 2024. The bank also approved an interim dividend of 1.25 naira per share, marking a 25% increase over last year. So we have those earnings coming out there. We're able to we'll get that up for you later. But in a landmark step to boost financial inclusion, the federal government have launched a pension-backed loan scheme aimed at empowering retirees with access to affordable credit. Rolled out through the Nigerian Consumer Credit Corporation in partnership with Leadway Trustees and Optimus Bank. The initiative allows pensioners to borrow from 50,000 naira upwards, with limits tied to their pension income. Speaking at the MOU signing in Abuja, Credit Corp CEO Zoma Wamba described the program as a new lease of life for Nigeria's senior citizens, anchored on affordability, security, and dignity. All right, let's get a quick check on our major forex earner now. We've seen oil prices edge lower today as concerns over weakening U.S. fuel demand that overshadowed optimism from the Federal Reserve's first rate cut of the year. We see Brent crude that slipped, trading about $67.27 a barrel, while WTI fell about 0.3% to $63.38 a barrel in early trade. Despite a pullback, both benchmarks remain on course to notch a second consecutive weekly gain. We'll find out if that plays out later on. Today, some company news now. Takaful Insurance Limited, once again, they're rewarding policyholders who made no claims at its 2023 surplus distribution and claim celebration. The company announced a surplus of over 404 million naira to more than 1,000 participants, including financial institutions, public and private organizations, and individuals. With this payout, Takaful has now returned close to 1 billion naira in surplus since inception, underscoring a model built on trust, fairness, and shared prosperity. Take a listen.
Very, very limited public.
It is a celebration of trust. Takaful Insurance Limited, once again, brings together regulators, partners, and industry stakeholders for its annual surplus distribution and claim celebration. A defining moment that reminds all that insurance can do more than protect, it can give back.
This gathering is particularly significant because today we announce the distribution of over 400 million naira in surplus for 2023 alone. But beyond this year, together we have shared a staggering 1 billion naira in surplus since our inception.
Unlike conventional insurance, where profits remain within the company, the Takaful model is built on mutuality. It isn't just a model, it's a movement.
I want to congratulate the company for all the work done so far and for the values that has been created. And I want to congratulate the beneficiaries for making the investment, because if you're getting returns, then you made an investment.
Since its first surplus distribution in 2017, Noor Takaful has remained consistent. The numbers prove this. Over 12 million naira in 2017 to over 15 million naira in 2018, over 36 million naira shared in 2019, over 109 million naira in 2020, over 208 million naira in 2021, and over 116 million naira shared from the 2022 financial year. Going by this year's surplus payout, the company has now returned over 400 million naira to more than 5,000 participants nationwide.
500 to 600 participants will be receiving various amounts from the surplus amount. And this is something that we've consistently done since we started operations. It means that year in, year out, we give back money to our policyholders or participants who have not made a claim, and we have never failed. Based on our ethical nature, it's something that we believe will continue to distribute and pay out.
Beyond the surplus distribution, this year's celebration came with a sprinkle of surprise, as partners, institutions and stakeholders not only received their share, they walked away with gifts from a raffle draw.
Consistently in the last 4 years, we've been getting surplus distribution for Noor Takaful. And like I said, we are one of the key major participants in terms of our bank, what we do, and also engaging our customers to also take Takaful insurance. So that's necessitated us being part of the people eligible to participate in the surplus distribution.
As the curtains fall on the 2025 edition, Noor Takaful leaves behind not just checks, but a message that with transparency, accountability and fairness, insurance can inspire trust, drive inclusion, and improve the financial fortunes of Nigerians everywhere.
All right, let's kick off the conversations today with trade facilitation. We know Nigeria Customs play a critical role, not just in revenue collection, but also in shaping Nigeria's trade competitiveness. With the AFCFTA implementation and Nigeria's push for non-oil revenue, Customs is at the center of the conversation on trade, security, industrial growth. Joining us now to explore this, we have Aliyu Maiwada, is the Assistant Controller of Customs, joining me right there in Abuja. Great to have you on the show. Good morning.
Good morning.
Fantastic to have you. So, most of the time we see the data, coming out from the Customs Service. We see the revenue for 2024, about 6.1 trillion naira. We see export trade, 136.65 trillion naira. Customs revenue, Q1 2025, I think about 1.3 trillion. So we're seeing, the revenue there growing, and definitely that's, I believe that's fantastic work, getting all this kind of revenue, from the your operations, at the borders, and, helping the federal government, get some revenue out there. But, talk to me about how, the Customs is working to, cut, clearance times, because we know there's still difficulties, when it comes to, the import-export business. Most of the time, when you hear some individuals trying to get into this business, the first thing they're afraid of is they don't want to deal with, the border issues and all of that. Talk to me about what you're seeing so far.
Well, thank you very much for this opportunity. Let me start by saying Customs, I have stated on this platform, and I will repeat it again, Customs is sitting on a tripod. I can see the camera facing me is sitting on 3 tripods. And if you remove one of the legs, that tripod will not stand, which means our revenue collection is very critical to the nation. our role as trade facilitators is also very critical and very important. And finally, our ability to suppress smuggling to the barest minimum is also very critical and important to the nation. So we are doing those, they are interwoven, and their relationship, if you try to paralyze any of them, then the whole system will also feel the impact of that inability. We are dwelling on the issue of making business more competitive, the issue of trade facilitation. We believe customs have a critical role to play in terms of trade facilitation. You can align, if you look at the WTO trade facilitation agreement, there are so many practical issues that customs administration need to adhere to. If you look at Article 1 to Article 13, most of the issues relating to trade facilitation are things that should be implemented by customs administration. Now, to domesticate this conversation to Nigeria, as a customs administration, the coming of the Nigeria Customs Service Act 2023 is a game changer to the Nigeria Customs Service. In our old law, where there was no existence of this kind of tools, trade facilitation tools that are backed up by legal framework. Now we have a customs administration that has a legal framework that backs the issue of advance ruling. And we have started advance ruling in Nigeria Customs Service. It's a trade facilitation tool. And advance ruling is simply a legally binding decision on classification, valuation of goods prior to importation of those goods. And it's legally binding, which means by the time you bring in those items, before you even make an intention to import those items, there will be a binding decision on classification and customs value of those items, which will also aid the facilitation of clearance of your cargo. Recently, we have also launched the Authorized Economic Operator Program. It is also a trade facilitation tool that you fast-track the clearance of goods for people that you are perceived to be very compliant based on certain criteria you have put in place. So we have launched EO, AEO, and those are efforts we are making to make sure that we facilitate trade. Then on the other hand, we have also launched a time release studies in Tinkan Island Port. What is time release studies? It's also a trade facilitation tool to look at the time required for you to the arrival of goods to the exit of those goods out of the port in question. Now, that time release will give you an idea who is causing delay at when and where, and with that scientific evidence that is scientific and is backed by data, you will be able to know where are the problems and you will improve in your trade facilitation tool. Then, for you to make trade very competitive, there must be, you have to cut the red tape. And your ability to cut the red tape defines by your own processes and procedures. The use of IT, the use of technology. If, for instance, the Customs Administration of Nigeria use 100% physical examination to clear the consignment coming into Nigeria, then there won't be trade facilitation. If customs is intentional about non-intrusive inspection technology, that is the use of scanners, then there will be effort to make sure that trade will be facilitated.
Okay.
So we have a modernization project that is 20 years concession agreement, and we have started the process of end-to-end automation of processes and procedures of Nigeria Customs Service. We have some scanners that have come into the country. We have gantry scanners that will be installed in Apapa. We have mobile scanners that will be installed in Tinkan Island Port. In our cargo ports, we have installed in Sakol and Nauko at Murtala Mohammed Airport. 6 have come into the country, and we will have more that will be coming.
Okay.
Apart from other issues we are using to facilitate trade.
Well, with what you've said so far, you guys have been very, very busy, but, still looking at the revenue generation side of things, you did explain that, you guys stand on a tripod of, responsibilities at this time. But, looking at the, mega revenue you guys keep raising, from 2024 even into 2025 already, definitely that's a plus, for federal government revenue. But in your opinion, do you think there's a risk that you might now concentrate more on revenue generation and, other parts fail?
Let me be very critical about this, your question. We are not concentrating on anyone. We concentrate on both of them. We are not giving, for instance, if you decide to say, no, I will not facilitate trade, it will affect your revenue collection. This is an analogy I usually give so that everybody will understand. If today an importer is defined to make an importation cycle 3 times or 4 times in a year, every quarter, and each time that importer imports that item, you collect a revenue of, let's say, 1 billion naira. Now, in a year, you are going to collect 4 billion naira as revenue. So, but if you have red tapes, you have stumbling blocks that are inimical to that trade facilitation, and that person was unable to import 4 times, and that person imported 2 times because of the delays you have caused in the port, it will also affect your revenue. Which means instead of collecting 4 billion as revenue, you end up collecting 2 billion. So that is the simple analogy that when you jettison any aspect of our core functions, it will affect. It's just a system. And it's just like your body. If you are having issue with your teeth, you will be very uncomfortable throughout. You will not be able to perform other functions because that teeth is part of the system called your body. So whenever, and if you like to say, no, let's jettison anti-smuggling activities, allow smuggling to take place, then now instead of people to come in through the approved channels and pay customs duty, you will end up following unapproved routes, and you won't be able to see the revenue to collect. Then that won't be controlled. So we are very, very intentional about balancing those 3 core responsibilities in whatever we do, and we don't jettison any one of them.
All right, let's look at some, when it comes to port dwell and clearance times at this point. You did mention, some of the improvements, that you've been making so far. But according to data from ResearchGate, we're seeing Nigerian ports, they're estimated to be 475% higher than the global benchmark. Say compared to the Tema port, then Nigeria's dwell time is about 53% higher. And this is data, coming from, I think, about 2023, 2024. What would you say, how would you describe the dwell time, right now? Have you seen any improvements, in your opinion?
Well, to be sincere, I would say yes, there is substantial improvement in our ports corridor, but there's still room for improvement. The gridlock you usually see in Apapa, Tinkan, today you can use your vehicle to access the ports. It's a product of deliberate intention by the government to make sure that our port corridors are a little bit more accessible. Those are issues relating to trade facilitation. Now, issues relating to terminal operators have a role to play in making sure that the ports are effective. Shipping lines have a role to play. The regulatory agencies like MPA also have a critical role to play. So I believe if all the apparatus of government as well as the private sector come together to see how our ports can be more effective and can be improved, then we will get better. But I think we are doing very well in our port. The volume of trade we usually manage in our port is something very, very humongous. It's something very big. And without that technical know-how, without ability, you won't be able to manage those quantum of trade within our port corridors. There is room for improvement, but I think we are doing better.
All right, let's look at leakages now. What reforms are being, introduced, to plug some of the leakages at, borders and ports? And do you think the reforms are working?
Yes, as the issue of reforms are ongoing. Very soon we are going to announce a major reform that is a product of we render service to Nigerians and we receive feedbacks on our operations and we look inward and improve in our operations. Very soon we are going to launch the one-stop shop. And one-stop shop, it's an effort to make sure that we harmonize our operations. All sub-units within the service will be domiciled within that one-stop shop. If you have any intelligence, if it's customs intelligence or whatever, you will drop that intelligence within that one-stop shop, so that whenever consignment are going out of the port, nobody have reason to intervene or to cause unnecessary delays. Those are efforts of reforms. And I mentioned earlier the issue of technology. We have launched, for the first time in Nigeria Customs Service, we are launching our own indigenous clearance platform called Bodogu. And that Bodogu is a unified customs management system that was we started from scratch. We built that system, and today that is what we use for clearance of goods. We started, there were glitches along the way, but we are receiving feedback from members of the public. We are improving, we are making our system more robust through the use of IT infrastructure. We are looking at issue of diversion of cargo. We are coming up with an electronic cargo tracking system, part of our effort to modernize what we are doing. And with that, we'll be able to make sure that goods consignment leaving the mother port to terminals do not get diverted along the way. That is part of reforms what we are doing. We have also regularized our anti-smuggling strategy so that you won't be seeing customs everywhere. That is what I've mentioned, the issue of one-stop shop. So those are things we are doing our reform.
Right.
Now, I want to talk about post-clearance audits.
Okay, you did mention...
audit,
you did mention the Bodogu initiative, and you said, I think you did allude to some issues, with the platform. Have those issues been resolved?
It's a system that is robust. Today, if there are complaints, we have 24 hours help desks that listen to members of the public, importers. We attend to problems. It's a new system. You have to make sure that people understand how that systems work. They are used to our legacy, our platform, Nigeria Integrated Custom Information System 2, NICIS. And we have a new system that comes with also some different features. So what we are doing now is to make sure that we optimize our stakeholders' engagement. We listen to our stakeholders. We have held a very robust stakeholders' engagement in Lagos. We are going to have one next month in Port Harcourt for the eastern ports. And we are listening to members of the public about any complaint. Where we need to improve, we improve on the system. Where we need to explain, we explain. Where we need to train, we train. Where we need to expand our network, we expand the network. So Bodogu is working. Yes, there will be problems, but those problems will be surmounted. It is our own. It is something we develop indigenously. The source code starts from here, and it is our own. So we have to allow our own to grow, and we must rely on our own.
All right, definitely we'll keep tracking progress there. But I would like to get your what you've noticed, when it comes to exports and imports. Have you noticed any trend, interesting trends on the export side of things? Leaving Nigeria, are you seeing, huge demand for our exports in, some segments? Are you seeing our exporters actually, doing well, when it comes to sending some of their products out? What are you noticing?
Well, export also have its own value chain. As customs, we also have a role to play in line with the value chain of those who are responsible to make sure that export is improved. We have other agencies that are also responsible. What we have done in Nigeria Customs Service is to create a dedicated command for export. We have a Lily Pond Export Command, and prior to that, when items get to mother port, they get inspected again. But now, the seal is being granted by that export command. Everything is done at that export command. And based on the data available to me, I cannot recall the figures, but it's something that it's already available online. The review of the activities of export command in the first half of 2025, there is substantial improvement in the nature of the quantum of goods and the value of goods, that is free on-board value of those items that have been exported outside the country. However, there are other aspects of export which may not fall within the purview of the Nigeria Customs Service, but I believe some of the items that we export, some of them are raw materials, and we are looking forward to see how we can improve in exporting finished items that value has been added to those items, majorly using issues such as preferential trade agreements, such as the African Continental Free Trade Area, the issue of the ETLS, ECOWAS trade liberalization scheme, and so on, regional and continental integration that we can use to make sure that our product, our finished product, gets out of Nigeria. We can see that from one of our beneficiaries of AUO, is a company that produces some certain items. They have also export some items under the guided trade initiative under African Continental Free Trade Area to some Eastern Africa. So we believe there's room for improvement. But however, as customs administration, we believe export is very critical, is very integral to the success or to building a better economy in Nigeria. And we are doing everything possible to make sure that it works.
Fantastic. Hopefully we get more finished goods out of the country and get all of that important forex. Thank you so much. Mr. Aliyu Mewada is Assistant Comptroller of Customs. Thank you so much for coming on the show this morning.
Thank you for your time, but I would like to add that we are going to host the African Continental Free Area Conference in Nigeria in November. And part of the effort is custom to intersect between so many components of AFTA to dissect the problems relating to AFTA and see how AFTA will work. So we believe we are taking a leading role because the Comptroller General of Customs is chairman of the World Customs Organization Council. So he's using that seat to make sure that AFTA works for us.
Fantastic. Let Africa trade with Africa. Thank you so much. Enjoy the rest of your day.
Thank you. Mm-hmm.
Well, it's time to talk about food. Nigeria's restaurant industry, that's evolving rapidly. We've seen rising food costs, shifting consumer preferences, and the impact of technology forcing restaurant owners to rethink how they operate, from digital ordering platforms to creative menu engineering and franchising models. Restaurants are finding new ways not just to survive, but to scale. Today we'll explore how it's looking for Nigerian restaurants, how they're innovating at this time. And helping us to unpack this, we have Bimpe Fashion, who's the founder, Orile.
Yes.
Interesting name.
I know.
Yeah.
I hear that all the time.
Why didn't you choose Ikoyi or,
Okay. So Orile, because like I said before, Orile is a Yoruba name. Orile means top of the house.
Top of the house.
Orile means headquarters.
Thought about it like that.
Exactly. So in this context, Orile means headquarters of Afrofusion.
Nice.
Yes.
I like it.
So that was the idea behind naming our restaurant.
I know a bit about the area.
Yes.
Really, quite interesting. But looking at the business now, you're a CEO.
Yes, please.
And I love to ask this question, to CEOs that doing business in Nigeria. What keeps you up at night? Looking at the Nigerian economy, right now, doing business in this environment, and what's helping you sleep?
So what keeps us up at night is the overhead, the constant rise in our overhead. Today, prices keeps going up. And as it is, most suppliers don't have constant price lists. Years back, they would say, okay, this is our prices for the month. But that's not the case now. You wake up and your profit margin has shifted by a significant percentage, yes. And that's because prices keeps fluctuating. It's this price today, it's this price tomorrow. And know that in the market women don't care. Whatever price they put their stuff is how much you're going to sell. In the restaurant, however, you can buy a plate of food at this cost today, and then you come tomorrow morning, it's changed, and then the next day it's changed.
Oh, that'll be crazy. Because
exactly.
If I buy this, if I get a plate for 3,000,
yes.
I come back tomorrow, it's 4K. I'm not coming back again.
But best believe that's how it happens in the market. Yes, you wake up, palm oil is 95,000 naira today. The next day is 110,000 naira. Yes, we're at the mercy, so we have to buy. And what that means is that the difference in the actual price yesterday and the selling cost today has already tampered with our profit margin, because we determine selling cost based on our overhead, buying cost of ingredients, and then we mark up. These applies not just to even food costs, overhead, running costs. You get a bill today, diesel price has changed. oh, you get a bill today, Loma price has changed. Like across board, we keep getting increase in production prices. It keeps everybody
Right.
up
So that's
at
what
night.
keeps you up at night. So what's helping you sleep so far?
What's helping us sleep, or me particularly, my
Yeah,
business,
you're doing business. Yeah.
is that we're always going to give quality. And what customers want is quality. They need quality for what they buy. So in as much as we have all of these difficulties behind the scene, as long as we're able to still meet our customers' demands exactly how they want it, it keeps me, it helps me sleep at night. Knowing that whatever the case may be,
Right.
we will still get our customers, our loyal customers, and they'll come back.
Right.
Even new ones. Oh, this food is expensive, but it's good. Oh, the portions are great. It tastes very well. That keeps us.
Right. And, we've got descriptions, about food business. They say
Yes.
when everything goes south, food will always sell. Is that still the case?
I would say yes, and I would say no. Food will always sell, but the quantity of food that will sell then gets altered. Say, for instance, I have a purchasing power to buy, to eat out 3 times a day. I might then cut out to eat once a day. Is food selling? Yes. Not as much as it typically would if there's no constant rise in production costs, basically. So yes, it's a yes and no.
And talking about, what the data is showing, food inflation, that's at 21.87%, and this, from the rebased data from the National Bureau of Statistics. Then, looking at the what's contributing to food inflation, we see restaurants and accommodation contribution there year on year 2.60%, and month on month about 0.10%. So, definitely we've seen a downtrend, when it comes to inflation.
Yes.
But it's still high. It's still double digits, at this time. And that's why, some people will say when they go to the markets, they cannot feel that inflation is really going down. But prices have been quite stable this year, right? Have they been stable?
No.
A couple of months? No?
No. I would say no. There are other factors, and it depends on the kind of markets you're talking about. For restaurants, we don't deal with raw food items only. Like I mentioned, I spoke about diesel. So if the cost of basic food items go down, other running costs are still constant. And what you buy to cook in the house is totally different from running a restaurant business. So that's where the difference comes in. However, we on our own part, we try to ensure that supply chain is where we then ensure we're not dealing with middlemen. And that way, it cuts out the fact that somebody has marked up a particular percentage that's meant to come to our pocket, that's taken out of the picture. We go straight down to the source. So maybe that reflects a little bit, but don't forget, there are other running costs that hasn't gone down and directly does not affect production costs.
Right.
Yes.
And, when you look around Lagos, there are a lot of restaurants in Lagos, and it seems, more is springing up,
Every day.
planning to come in. And it makes me wonder, is the money really that good, at this point? And looking at some of the, restaurants, I see some of them try to, concentrate or make sure that the ambience is really nice, so that people will, come in there, want to take pictures and just enjoy,
The ambience.
the vibes in the restaurant. What is the business really that good?
So the business is good, whichever way you want to look at it.
Right.
Ambience, there's food at home. Let me put it this way, like everybody says. Mm-hmm. There's food at home, so if I'm going out to buy food or I'm going out to dine, it's for, not basically the ambience. The food has to be great and the ambience has to be good as well.
So you don't make it look beautiful and you're not serving good food.
You won't get customers. People pay for value, not just the ambience. But then again, the ambience always has to be there because it's a plus. People go out, take pictures, and not just Nigeria, it's everywhere in the world. In the industry, people go out, take pictures, want to have a nice time. You're talking about good vibes. If the ambience isn't great, there's no vibe. Yes.
So even if the food is good and the ambience is not so good, you have a problem.
Yes. So there has to be balance. Sometimes customers say, oh, they prefer good food and all that, but to be very honest, they feel more comfortable in a very nice environment because, again, there's food at home. You might as well eat from home or eat at home.
So if you're going into that business, get your ambience straight and make sure the food tastes really good. And maybe
Food first, ambience is a
ambience
plus.
later, then maybe customers can like your food so much that they don't mind going to wash their dishes. Remember the stories like that?
Yes.
Yeah, you have
can
Mama
pay-
Risika somewhere. You're actually washing your plate,
Just so
to
you get
order
served.
food. Right.
Yes.
But I know there was also one issue, with restaurants that have really nice, ambience. Most of the time, people just come there and take pictures, and they're not ordering food. They just take the pictures, get the content they want, and they leave. Is that still the trend right now?
To a large extent, people will take advantage of whatever is available. If your food isn't good and the ambience is great, they'll take pictures and go where they can buy good food. However, I do not think any business exists solely for ambience, a restaurant business. So most times there are house rules. Minimum spend.
Minimum spend.
You have a minimum spend, number of hours you can spend. So significantly, you're already going there to spend your money and take pictures in turn, not just to go and take pictures. I don't think any restaurant exists in Lagos to pay bills for ambience. Otherwise, they probably charge for it.
Yeah, they'll tell you to take pictures, spend at least 30K or something.
Exactly.
All right, so, I remember a time, maybe 2020s, 2021, 2022, you're going for fine dining, you want the whole experience and all of that. And you could spend maybe about 40,000 and you'll be well fed.
You have a ball, yes.
But now, we're seeing bills up to 200K just for 2 people. How's demand looking? Is the demand meeting up?
The demand is I will keep saying this, like you said. There are old restaurants and there are new ones emerging. Trust me, if there's no market for it, you won't have new restaurants emerging. There's market and there's demand for it. You just have to strategize to meet the demand, basically.
Right.
So yes.
So what are you guys doing to reduce those menu costs?
It's really not up to us. We don't have that. We don't have the power to do that. For every business, we want to make sales and make profit through those sales. And one of the ways we ensure prices don't go overboard, just to control, is to monitor the supply chain, because that's the major source. Whatever you get, it's input and output basically. So once that is sorted, I can say that bit we can control, but overall control, we do not have control over it.
Right. So what are you seeing going forward now for your industry? How is technology, helping you, at this time to, get to your customers, make those sales and make sure you stay in business?
So you know that times have changed and marketing is not just left to billboards, newspapers, and TV commercials. Yes, there's technology integration. So let me speak about digital marketing. You have your phone, you have a lot of technological equipment here. Digital marketing is it's global. It's not just Nigeria. So everybody has moved from, like I said, newspapers, TV commercials, and the billboards to the digital world, and then you put your best foot forward. Once you put your best foot forward through your adverts, you leverage on that to get customers coming. So that's one way for marketing. Another one is partnerships and collaborations. You find out that businesses are partnering depending on the model of your business. So say, for instance, a Q service restaurant, for a lot of them partner with Chowdeck, Glovo for seamless food service. So you order at the convenience of your office and then it gets delivered to you, as opposed to how it used to be decades ago. Oh, I had to leave work to go get food. That's not a problem. So that helps. Like I said, digital marketing, let me go back to that. So partnerships, collaborations through digital marketing is what works. Depending on the model for my business, for instance, oftentimes to collaborate with influencers that have bigger platforms where our potential customers can see what we have and then come in. We also partner with food bloggers, people who come to review your food and say, oh, we've tested and we've trusted, you can also go do that.
We have tasted and
we've
seen.
tasted, we've seen, we've experienced, and it's your own turn. So through these means, we're able to take advantage of the technology integration right now to market and reach our customers.
Fantastic. All right, I'll keep my eyes on those, menu prices. I'm praying, they come down because I like to eat out, sometimes, and just enjoy, the Friday. But we'll keep tracking your industry. Thank you so much. It was great having this conversation
for having
with
me too.
PK Fashion was the founder of Orile
Restaurant.
Yes. I like the name.
Orile, Remini.
Orile.
Exactly.
Fantastic. Thank you so much.
Thank you.
All right, let's get a check on the global space now. Let's see what's playing out. And definitely, we've had our eyes on the central bankers this season. We did get the latest one from the U.S. Fed Reserve. The first cut, 0.25%. That's in right now. We're also seeing major central bankers also cutting rates at this point. But let's get a check on this latest rate cut and the impact in the U.S. For the U.S. housing market. And joining us to discuss that, we have Eze Mokwodu, who's a realtor that practices right there in the U.S. Great to have you on the show, Eze.
Yeah, you too. Thanks for having me back. I appreciate it.
Fantastic. So I'm wondering, when you heard that very expensive good afternoon from Fed Chair Jerome Powell and the resulting cut in interest rates, what was your first reaction?
Excitement. I've been waiting for this. Everybody's been waiting for this, and it boosted the morale. Between when the announcement was made to today, I received about 15 phone calls. People thinking about buying, people asking questions about refinancing. It just boosts the morale. So I'm really excited about it.
Right. So I guess the impact for the housing market, I guess it's going to be good for demand.
Oh yeah, definitely, definitely. It's not enough to make like a huge impact, but just the mental state of people. They're talking about real estate. I'm receiving phone calls. Even today, I'm about to show a couple of properties to some people just because of that announcement. It was a small cut, but it's enough to make an effect, in my opinion.
All right. And talking about being a small cut at this point, what does it do for affordability? Do you think home buyers in the U.S. now have a sense of affordability when it comes to buying homes and maybe first-time buyers?
The cut was just a small cut, which makes a difference because your mortgage is going to be cheaper, but the price of homes is still relatively high. So for certain people, the cut doesn't make a difference. It's still, the price of homes is still relatively high. So for certain people, it's difficult. But the mortgages are low. We're talking about real estate. People are in that mindset right now to make purchases, and I'm seeing it already.
So in your perspective now, what would you think maybe a 50 basis points would have done, when it comes to consumer sentiment or buyer sentiment in the U.S.?
Can you repeat the question, sorry?
Yeah, a 50 basis point cut. Because we got a 25 basis point cut this time. Do you think 50 would be more stimulating, for demand?
Oh yeah, definitely. I think my phone calls would have quadrupled. So my phone calls increased, but if it was 50, definitely, I would have received way more phone calls.
All right, so do you think builders, developers in the U.S., do you think they're going to gain confidence, from this move, potentially, boosting the supply side of things, when it comes to homes in the U.S.?
Honestly, I definitely think it would because things are more affordable. There'll be more asking about brand new homes. Already people are having conversations about things like that. So we're expecting some more cuts. And when that happens, everything's going to be up and up.
Right. And I know you sell a lot of houses in the U.S. What advice would you have for buyers, first-time buyers, right now, sellers, trying to navigate this new interest rate environment?
For buyers, I tell them, get pre-approved right now. Get pre-approved right now. Start shopping. Don't wait and say, okay, I'm going to wait for the interest rate to go down a little bit. No, get pre-approved right now. So when the opportunity arises, you could strike. And for sellers, there are buyers out here. You just need to price your property right. Price it at the right price. Don't be too greedy, and you sell your property. That's the advice I'll give.
All right, fantastic. We'll keep tracking to see. We've got forward guidance. More cuts are expected in the U.S. We'll see how that continues to impact the housing market there. Thank you so much, Eze Akwadu.
Thank you so much.
All right, let's get a check on other stories now. We see UK retail sales that rose in August, but at a relatively slow rate, suggesting that the country's consumers they remain under pressure. Retail sales lifted by 0.5% in the month of August, with the rate of growth staying the same as the revised level seen previous month, according to data released by the Office of National Statistics today. Economists had predicted that retail sales, which mostly reflect goods and not adjusted for inflation, would rise by 0.4% on a monthly basis. But we see retail sales gained by 0.7% on an annual basis, having increased by 0.8% in July, revised lower from the previously reported 1.1% growth as sunny weather helped British consumers return to the high streets. Now we see China's market regulator today said that Xiaomi will recall 116,887 SU7 electric vehicles to fix a defect in their assisted driving system, amid safety concerns following a fatal accident earlier this year. The recall covers standard edition of the SU7 models built between February 6, 2024 and August 30, 2025. According to the State Administration for Market Regulation, some vehicles may fail to properly detect, warn, or respond in extreme situations when the L2 high-speed navigation assist function is engaged. And we see Japanese consumer price index that slowed or cooled as expected in August, while underlying inflation also eased, but remained well above the Bank of Japan's annual target range. Friday's reading came in just hours before the conclusion of a Bank of Japan meeting, where the central bank is widely expected to keep interest rates unchanged around 0.5%. Headline CPI inflation fell 2.7% year on year in August from 3.1% in the prior month, according to government data. National core CPI, which excludes volatile fresh food prices, fell to 2.7% year on year in August, as expected, also retreating from a 3.1% print in July. And Argentina recorded a trade surplus of $1.4 billion in August. According to the government statistics office, the South American nation registered $7.87 billion in exports and $6.46 billion in imports during the month. The August trade surplus significantly exceeded market expectations, coming in well above the $800 million surplus forecast that was expected. All right, and for the local bourse now, looking at the terminal, down 0.11%. We've seen weakness starting off the TGIF trade right there. UBA, Axis Holdings, Zenith Bank, First Holdco, Japol Gold Ventures, those are getting attention right there, according to the investing.com terminal. But at 1:30, I'll give you more updates on what's playing out with the markets that we track. Thank you for watching Business Morning. I'm Ladi Williams from the team right here at Channels HQ. Bye-bye.